Hello and welcome to The Bottom Line on TVP World, where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. 3.2%, that's how much the Polish economy has expanded in the first quarter of the year. This means that the country still tops the list of European countries when it comes to economic growth. What is Poland doing right and what are the challenges? Let's go to Jan Kennedy's feature report for more.
After a promising 2024, Central and Eastern Europe's largest economy remained on a strong path of growth, expanding by 3.2% in the first quarter of the year.
So it may well be that Poland is the fastest growing EU country in Q1, also, and certainly the fastest growing large EU country. So it's a good result.
Poland's economy grew at more than double the pace of the EU average. Among its regional peers, the Czech Republic recorded a 2% annual increase, Slovakia posted a meagre 0.9% growth, while Hungary's economy stagnated. Polish Finance Minister Andrzej Domański welcomed the figures via a post on X, highlighting increased investment as the main driver of growth.
Poland's GDP grew by 3.2% in the first quarter, significantly outpacing the EU average. In the coming quarters, growth is expected to accelerate further, driven primarily by rising investment.
A key factor will be the accelerated absorption of EU recovery and resilience funds ahead of the 2026 deadline. In the following months, however, analysts fear overall investment may decline and will be accompanied by the impacts of a trade war.
One is related to investment, to the fact that it might not be as big of a push as we had assumed. And the second is probably the more important one, and relates to exports and the impacts of the trade war on Polish economy and beyond.
Still, with strong internal demand, Poland's exposure to the trade war fallout will be much weaker compared to other more export-reliant countries in the region.
Within the region, we see Slovakia, Hungary and Czechia as most exposed to the direct negative impact of tariffs, and then the indirect impact will affect the whole region. Poland, in these terms, because it's relatively closed economy compared to Slovakia, Hungary or Czechia.
In fact, Domański claimed that Poland could see growth of above 4% in the whole of 2025, putting it at the forefront of the EU.
Economic growth in Poland has exceeded expectations of some analysts. Maybe that's why the country's finance minister Andrzej Domański is looking reassured in his forecasts, banking on investments boosting Poland's economy for the rest of 2025. To tell us more about what lies behind the numbers, we are joined by Marcin Mrowiec, chief economist at Grant Thornton. Hello, and thank you very much for joining us.
Hello, thank you very much for the invitation.
So one could say that Poland is doing well with 3.2% GDP growth for the first quarter and in comparison to other EU countries. So with the average EU economic growth at 1.4%. And it must reassure Andrzej Domański, Poland's finance minister, who has been brashly advocating this growth. Can you tell us what has actually spurred on Polish growth in the first quarter?
Well, actually, we have two main drivers of economic growth in Poland and as well as elsewhere. The size of those engines is similar in the economies of the EU, and these are private consumption and investments. In terms of private consumption, we still have a pretty solid private consumption, even though it is not as strong as it was last year. Last year was exceptional in many ways. I can delve into that later on. But this year the data for the first quarter will likely prove, because as of today we only have the headline data. We don't have the breakdown, so we don't know the precise number for private consumption. But it can be safely assumed that this is somewhere around 3%, and this is the level, this is the pace of growth that I expect for the rest of the year. This is going to be pretty stable and solid. But the point, the area from which economists are expecting strong boost are investments. because we do know that this year the inflow of EU funds, both from the reconstruction facility as well as from cohesion funds, will accelerate. And this will be the key and the main driving factors. And this will be done versus the very weak base from the previous year. Recently, there was a revision of GDP data for the past 2 years. And there was a significant revision of the investment data for the second half of the previous year. Now we know that it was minus 6, minus 7%. So this statistical data that will come this year will be compared to very weak data from the previous year. And this will produce a very strong growth. And we will likely see further acceleration of the quarterly data in the second, third, and fourth quarter of the year.
Looking at the other side of the issue, is Poland actually doing well GDP-wise? Because some economists don't actually think that, and they're actually suggesting that economic growth has slowed down a bit, especially if you compare it to the last quarter of 2024, where the results were at 3.4%.
Well, but there it is. We cannot so easily compare the quarter-over-quarter data because there are many factors that play a role there. So it is not so easy that we could say that because it is 0.1 or 0.2 percentage points lower this year versus the previous one, that there is some significant slowdown going on. We have to keep in mind that fourth quarter is nominally has the biggest GDP growth in the whole year because many projects are being finished in the final quarter of the year, and first quarter is kind of on the opposite side of the spectrum. So I wouldn't say that there was a slowdown. I would say that we are growing solidly and we have good prospects of further acceleration this year.
If Poland is doing so well, what is going on with other EU countries? Because the EU average is pretty low. It's at 1.4%. Is Poland simply lucky?
Not really. I mean, we have some elements of luck. We can get into the details later on. But the point is that Poland is a relatively well diversified economy. So, for example, if our southern neighbors, let's say Slovakia, is pretty much impacted by the slowdown in the automotive sector, we do have a lot of production for automotive, but we are not. Our economy is not dominated by this sector so much as the Slovakia. So now, for example, they are suffering from this factor. So we are pretty well diversified. We have some one-off sectors like this acceleration of EU funds, which have been postponed for many years, and now they will just come in full force. And we do have pretty strong private consumption, but we have and one point to consider when we compare the GDP growth pace of Eastern Europe versus Western Europe is that it is much harder to have the same paces of growth if your nominal GDP is so much higher, like, for example, France or Germany. These economies are many times bigger than ours, and also GDP per capita is much higher there. So it is harder to grow from such levels at such pace as we can do.
And to what extent is this result that we're looking at impacted by the trade war that the EU is experiencing in one way or another? Perhaps we can call them trade tensions because we are in the midst of a pause.
Not very much yet, I would say. I mean, we did see some acceleration of exports to the US. So apparently some companies anticipated there might be problems, there might be the tariffs imposed by the US. But I would say that as of now, we are not yet impacted. And this is my biggest point of concern for the remainder of the year. We do know that the tariffs were suspended, temporarily suspended, but I think it is safer to assume that the story is not over, that we will see further phases of trade tension and trade wars. And this is why I am a little bit more skeptical regarding this year's GDP growth versus, for example, the forecast of the finance minister.
So if, let's say that the EU doesn't succeed in making a deal with the US in the months to come or in this period until the pause is lifted, what kind of impact can we assume it will have on the Polish economy?
Well, many scenarios could be played, and as of today, there's not one most probable one because it depends on the decisions of many parts, including China. And I would point to China as the key direction to look at, because if it happens so that the US reimposes high tariffs on China, China will likely try to export its surpluses that would normally go to the US to the EU. And that would undermine production in the EU, that would undermine EU's GDP growth. So this is the scenario that could play out, and this would have negative impact on the growth of the EU.
And assuming whatever the scenario is, because it's a little bit hard to tell, how much time will it take before all of this impacts Poland? Because obviously there's a ripple effect and it takes some time before it impacts each member state economy.
This depends on the force of the factor that plays a role, and in this particular case, this would depend on the tariffs, on the level of tariffs that would be imposed on the exports from EU to the US. But I think this is given that the GDP data is released on quarterly basis. In the first quarter, that we would have the actual impact of the decisions taken by the US. So the first quarter that we have the full impact of the data in this data, we would see it in the GDP, and of course we would see it much quicker, for example, regarding inflation and regarding the monthly figures.
An economist, just moving back to perhaps more domestic issues, Poland's bank PKO agrees that although this quarter's results aren't necessarily all that great, they still think that 4% GDP growth for the whole year is still possible. Do you agree with that?
I think it is still possible, but I think that this is the optimistic scenario, assuming that the trade tensions disappear or largely disappear.
They highlight that the main risks to that result are these external European export issues and international trade wars. Do you think that, A, that it's likely, and B, do you think that Poland will be able to somehow manage those risks and tensions somehow, given that the economy is quite diversified?
Yeah, given that the economy is quite diversified and given that our exports to the US is minuscule, I think that we are better positioned than other countries like, for example, Germany. We are better positioned to weather this potential storm. So I'm not very much worried, but I still think there would be impact, because the impact, even though the main impact would be on the German economy, the Polish subcontractors of the German companies would be affected, and this would have a ripple effect for the whole economy.
And assuming that this GDP growth is met, let's say a target of 3.9%, 4%, let's say it happens this year, what would that growth be attributed to most in Poland? I mean, there's a lot of talk of these investments that are happening. What is happening in the economy right now that suggests that this growth will happen? What are the strengths that we can see right now?
Well, one point is private consumption. I said that we should expect a figure around 3% plus throughout the year, but maybe it will be a bit stronger, because when you look at the data regarding the retail loans, if you look at the data regarding the consumer optimism, there have been positive surprises in the latest data. So this could potentially mean that the private consumption will be a bit stronger than we right now assume. That's the first point. And the second point is that we do factor in a very strong increase of investments from the EU money. But there is a possibility, there is a chance that the private sector will get more mobilized regarding investments, and this is where another positive surprise could come from.
And another angle to this is the Polish zloty, which we see is stubbornly strong, regardless of all the challenges that we see happening. What does this signal? Is it a suggestion that there is trust from the international investment community? Is it a suggestion of strong fundamentals of Poland's economy? Can you tell us a little bit about what is going on with the Polish currency?
There are several factors. First of all, we have to keep in mind that interest rates in Poland are still higher than in the US or in the Eurozone. This is always helping the economy. Second, I think that there is a widespread anticipation that GDP growth this year will be strong in Poland. So this gives reassurance for those holding zloty assets, and they are not selling out. Looking from the global scale, I mean, we do worry about our deficits, about our fiscal deficits, and I also do worry about it. But from the point of view of a global international investor, our debt to GDP is still much lower than in Western Europe, much lower than in the US. So this creates a situation that Poland seems to be a safe place to be right now and to hold Polish assets. And this is reflected in the relative strength of the zloty. And we saw this strength especially versus the US dollar, which is another good news for our economy, because for us, the dollar is predominantly the currency in which we buy commodities, buy energy, for example, crude oil. And if the zloty strengthens versus the dollar, that means that, for example, fuel will be cheaper and energy and metals imported will be cheaper. And we predominantly export in euro, and the zloty versus euro is not as strong as versus the dollar. So this is good news in that our exports will be done in relatively in zloty relatively weak versus the euro, which means higher margins for the exporters. So also on this front, we have wind coming from the right direction.
And speaking of exports, there has been concern about the level of Polish exports in recent months. Data from March is out, and Poland has a trade deficit, while last year in March it had a trade surplus. What is your suggestion of what the outlook is for Polish exports?
The outlook very much depends on the business activity level in Western Europe. We saw that our producers, our exporters were struggling last year because of the weak demand from Western Europe. We do hope that if international situation stabilizes and when EU growth accelerates, it will also mean higher demand for exports from Poland.
And just as we wrap up slowly, how do you think that the Polish government's fiscal policy will continue to impact the country's economy and its potential growth for this year?
This is my point of concern. Recently, we saw some data being revised, and we know that our deficit for the previous year was 6.6% of GDP. And this is very high if you consider that we had considerable GDP growth last year. And for this year, it will be not much lower. And this is a situation that is dangerous in the long run. Something pretty serious should be done about it. We had some pre-announcement that there will be consolidation of public finance, and I do hope that it will take place, most probably after the presidential elections, because these issues are pretty much politically charged and nobody wants to touch them before any significant elections. But I do hope that serious steps will be taken later down the road.
Do you think that the finance ministry will have to revise its budget?
If the growth is strong, there might not be such a necessity, but indeed the GDP growth would have to be around 4% as expected by the finance minister.
Okay, Marcin Mrowiec, chief economist at Grant Thornton, thank you so much for making time to speak to us.
Thank you very much.
And that concludes The Bottom Line for today. I was your host, Marie Cato, and we're on every weekday at 5:10 CT on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.